Earlier this week, Cava, the fast casual Mediterranean restaurant chain, went public, listing over 100% above where they expected to price. And so here it is. You got the animal spirits. People are excited to buy a new IPO. In this video, I'm going to explore Cava and to assess if the stock is as tasty as their food. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. So let's dive into Cava to understand what's going on here. So you have this fast casual restaurant chain rapidly expanding from 22 Cava stores to over 200 stores recently. So very fast growth in the number of restaurants. You can see that the revenue has also exploded with the number of stores. And, going back here, they're saying that the average unit volume, per store is over $2 million. So this is, attractive looking, a lot of volume going through these stores. And the way to think about it, it's sort of like a Chipotle where you go and you walk around and it's like build your own bowl or build your own falafel, except instead of a burrito like Chipotle, it's build your own Mediterranean food. And so that's what you're looking at here with this key concept with Cava. Very fast revenue growth for their Cava brand over time. Talking about 50% CAGR over several years, most recently growing around 76%. That said, it's always important to read the footnotes. Management talks about, we are converting a lot of Zoe's kitchens. And so a lot of our revenue, a little under half of our revenue, was actually from converting Zoe's kitchens, which they owned, into Cava stores, which is kind of weird because just a few years ago in 2018, they acquired Zoe's Kitchen for $300 million. Now, management frames this as like, hey, this was our strategy to buy Zoe's Kitchen and then convert it to Cava. It's unclear to me, though, because $300 million does strike me as a hefty price, to pay to only then just convert a bunch of stores. So, and I would want to understand if this was possibly, poor capital allocation before diving in further, to say, hey, is this tasty? So that is interesting to see. Previously acquired Zoe's Kitchen and now converting them into Cava stores. And that's why the optics of their growth is as fast. So you need to be looking at their total revenues. Management does look at their profit margins, saying, look, our store profit margins are actually quite reasonable. They're saying around 20% store profit margins, growing very quickly in line with revenue. And they're saying, look, our profit margins, our profitability on a store basis, restaurant level, exploded 150% higher year over year in the most recent quarter. But the problem with looking at this figure and, management saying, look, store level profitability, $90 million in 2022. The problem is that store level profitability doesn't account for significant operating expenses that you have when you own the business. I mean, as a shareholder, you own the business. You don't just own a store. You don't just own the unit economics of the store. You have to factor in all these other real expenses. For example, general and admin expenses, which is $70 million. So that eats into a significant part of the Cava profitability. And you're looking at, significant depreciation and amortization. So that comes from operating, building new facilities. They do have significant opening costs. So you can view that as a sort of a one-time expense tied to, building out new stores. But I would expect that to see. So it's a one-time expense that keeps recurring because if this is going to be a growth stock, you're going to keep seeing that expense. So it's a one-time expense that's hitting this year's financial statements. But when you're thinking about the long-term free cash flow, you would probably subtract it, to think about what's the normalized free cash flow. And talking about impairment and asset disposal costs of around $20 million. So that makes me think they possibly overpaid for Zoe's, which does make me a little bit more cautious about management capital allocation. So I'll want to learn more about that, but it is sort of a data point for investors to consider that, look, this business is nowhere near real profitability yet. If you look at, I'd argue you should consider G&A, so general and admin, as well as depreciation and amortization, because you do need to keep up the stores, and they're spending a lot more than this to build out new stores. So looking at this, they're still at a cash burn level. And I want to see real free cash flow personally before I would pull the trigger on a business like this. You look at Chipotle, when they went public, they were already profitable on an income statement basis. So, you got the sense that, okay, maybe we could self-finance going forward. They're not quite there yet when you're looking at where Cava is. But I'd like to see, more detail. Their most recent quarterly results suggested, hey, maybe they could be. So I'd want to see more detail. The question is, do they have any competitive advantages? Are they potentially unrivaled? When I ask AI Ticker Chat a new revolutionary tool that uses artificial intelligence to try to, look at individual documents to give you an assessment of what management might be saying in this document. It summarized, hey, does this company have any competitive advantages, with a bunch of sort of, and keep in mind, this is pulling straight from the document, a bunch of things that weren't really compelling for me, which makes me think, yeah, Cava doesn't really have something that's truly, unrivaled. Maybe it does have this first mover advantage with being possibly the largest Mediterranean brand at scale, and that's something that they call out. So maybe that can be some sort of niche where they can grow significantly over time. So that's going to be depending on, will the addressable market respond favorably? Will they continue to be able to roll out new Cava stores? But everything else in terms of, broad appeal, focus on health and wellness, I'm just not sure that really strikes me as a competitive advantage in the restaurant industry, which I'd say is, very competitive. One prospect is the idea that they could, scale up their consumer packaged goods. So maybe a brand, so maybe it's the Cava brand that could be really valuable over time. They show pictures of like, hey, we're selling all these cool stuff like Cava hummus and Cava, tahini and crazy Cava feta. And so you're looking at all these Cava products, and when you look at their actual consumer products that are being sold, it's around 1% of their revenue. So really, this really is a restaurant story. It's a very, the restaurant industry is hyper competitive. They probably do have some scale advantages in terms of knowing how to operate and knowing how to roll this out, but they're still needing to prove their, what I think is the at scale economics. So they can show the store level profitability, but I personally would want to see the actual consolidated profitability in a real way for a full year before personally investing. Now, maybe that's too conservative. That's my own personal investment journey. So I'm looking at this and nothing's really jumping out at me as like, oh my goodness, this is absolutely super compelling. So the question is, where does Cava stock go from here? Well, first, I recently bought more of a stock. This was just a week ago or so, that I think has over 300% upside potential, that I called out to my subscribers at unrivaledinvesting.com. I also expect to raise prices soon. So now is the time to act if you'd like to lock in a favorable rate and take charge of your investment journey. That's at unrivaledinvesting.com. In full disclosure, this is not financial advice. So looking at Cava stock, it is important to recognize, even if you're looking at something where you're not sure if it's unrivaled or not sure if it really, has super strong competitive advantages, there's a lot of different burrito companies out there. But the reality is Chipotle did something with this sort of, conveyor belt. You go at the line and you build your burritos. That worked really well. And if you were a Chipotle shareholder, you would have done very well despite numerous problems that they've had where people were getting, stomach bugs. So looking at this, which is certainly like the worst thing you could do for a brand, for a business. And so here it is, shareholders have made over 4,000% in the last, decade plus. And so this is, an incredible story when you look at Chipotle. So the question is, could this be like the next Chipotle? Looking at Chipotle, looking at their profit margins, historically, currently around 13%. Previous highs, maybe around 15 to 18% profit margin. So maybe this is a benchmark, and I'm using AI ticker chat once again to show the financials. And so pulling this out, very easy to do. So I'm looking at this, thinking about how does this potentially apply to Cava? Because they're not there yet, but maybe they could be around that level. So for Cava, I'm assuming around a teens profit margin. They're currently growing this year on a consolidated basis, just under 30%. So I'm assuming maybe they can accelerate that the rest of the year. Looking at this business, how do you get an attractive return? And so this is a hypothetical valuation framework. The stock price can go way higher or way lower, but in order to get an attractive return, you would need to see continued hypergrowth of at least, I'd argue, 25% in the years ahead. You would need to see them get to high teens margins. Keep in mind, they're currently unprofitable, and you need to have a 30 times earnings multiple to get under a 100% return over the next 5 years. Personally, I think there are better investments out there where you don't have to make these types of assumptions to get that type of return. But look, as a hypothetical framework, stock prices can go way higher, way lower. Maybe they overshoot on this. Maybe they deliver closer to 30 to 40% growth, in which case you can do better. Personally, I just want to see a little bit more execution with Cava. I want to see that consolidated profitability, ideally even free cash flow, before I personally pull the trigger. But that's for me in my personal journey, where I prefer a little bit more of a conservative approach. I'm looking at this IPO and I'm thinking this does reflect that the animal spirits are out and about. I'm wondering how many more possible unprofitable companies are going to be eager to jump into on this IPO window. And so I broadly looking at this, this doesn't make me enticed. I'd rather go buy the food than buy the stock at this point. And if you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning into Unrivaled Investing.